Good morning, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is May 26th, 2013. Lots to talk about, so let's get started. Alright, so we'll just dive right into the SPY, which is the ETF that tracks the S&P 500. And for you newcomers, the reason why I do analysis on the S&P 500 is simply because the Dow only tracks the Power 30 companies. And we need more of a generalization of what the market is doing, and that should be the S&P 500, which of course tracks what it says 500. So with that said, we'll just dive right into this. I did create a video on, I believe it was Wednesday if I'm not mistaken. So this is Friday, Thursday, and Wednesday, so it should have been Wednesday. And that video indicated this upper trend line here being the resistance point. So if you want to just rewind to that video, then I kind of explain more in detail, so I won't get into that very much. What I will get into today is what everybody wants to know is what's going to happen next. Well, to be honest, I'm not psychic, so I don't know what's going to happen next, but I can tell you what the charts are telling me. Now, just to give you an update, these lines look a little bit different now, and all I did was I made them a little smaller and less intrusive. That way it's easier for me to read the charts. When it's too bright and there's too many lines, sometimes I can get confused, and I don't like that. The good news is in this video I did come up with more mathematical calculations. But you know, that remains to be seen as to which way the market goes. Okay, so I'm not going to say the market's going to go up, or I'm not going to say it's going to go down, but what I will tell you is what the pattern looks like as of now. Okay, so in the previous video I did talk about the possibility of pulling back to the 20 moving average, and that is exactly what it looks like we are doing. There is a potential that as the 20 moving average goes higher and we go sidewards, as when this price gets close to the 20 moving average, if it's already not close enough, we may get another bounce higher, and that could be possibly into the 169.52 level, which is the next level that I had created. Now just keep in mind the 169.52 level could have already been tagged. What do I mean by that? You old timers who've been watching these videos for a while know that these mathematical calculated levels are not 100% perfect. So when price gets close to it, such as this, which is what happened on Wednesday, it could be considered as already tagged. And if once a level is already tagged, it has already been used. And once a level has already been used, then I can't trust that level very much. I mean, you will see times where levels will hold up 1, 2, 3, 4 times, you know, such as that. But the first one will be the strongest one, and that's where I would put my money. Okay. Now, if we do head higher, the 169.52 level should be some resistance at least intraday. And if we continue higher, I also have another calculation here, is at 175.91. That is pretty up there. I've been saying all the way down here that I'd be surprised if we get to the 157, and I said I'd also be surprised if we get to the 165.80 level, and we've done that more than once. So I could also be surprised if we ever hit this 175.91 level, but if we do, again, that's when I'd be shorting. Would I be short? Am I looking for long positions in the market now? Absolutely not. I think just this huge run up needs to come down, and I think I don't know if that time is now. It's just it would be too risky for me to go in a long position, you know, chasing this uptrend right now, simply because it's a little bit too overextended and we haven't had a correction lately, and as we all know, corrections are healthy in the market, and once I see a correction happen, then I will have no problems going long. And when I say correction, I'm not looking for anything more than say 10%. Okay. Alright, so if we go higher, again, 169.52 will be resistance, as well as the 175.91. Now let's just say we head lower. Why do I think there is a possibility we could head lower? Well, we had this big down move here, and now there's a possibility we may consolidate under this 165.80 level. We may consolidate above this bottom trend line here, and as well as this 20 moving average. if we continue to consolidate long enough, or this consolidation decides to break early simply because it's overextended, and we close, and I've talked about this in the previous videos prior to Wednesday's video, we need to watch for a close below this 20 moving average. Once we get a close below that 20 moving average and another close below the low of that previous day, then I honestly think that we have a good chance of getting to this 158.62, 158.34 level. These are two new calculations that I was able to make, and this will only hold if we continue down. All right, we need at least 1, 2, 3 days. 1, 2, this is considered another down day, but these are green candles. 3 days in order for a pivot to be counted or any down move to be considered. Right now we need one more day for that to happen. So this 1, 2, 3, these are green candles, so we need at least one more day for it to come down, and we need a break below the 20 moving average. And that is something that I'm looking and watching for very carefully, because if we can get to this 158.62 level, then that would be a very nice sign. We will get, if we head lower, definitely get some support around this area, and at least intraday we will get some support in this area as well. But these are just going to be general regular technical analysis. These dotted lines here, these are formulated with a specific I guess formula, and it's been holding up fairly well. This 158 level held up for a single day, and then we broke through, and now we're coming down. This 165.80 level was the last level that I could possibly calculate before this move has happened, which is why this 169.52 level, if you look at where the line started, it started on Friday, and that's simply because that's when I was able to calculate these numbers here. Okay, so I'm not gonna lie to you, there's no way of me telling that I could have gotten close to the 169.52 level, because I made that on Friday, which was after the fact of what happened on Wednesday. But I really didn't need this level here, because we had this upper trend line here showing resistance, as I talked about in the past few videos actually. So which is why I did initiate a short right at this trend line here. This pop through here was a fake, and then now they started selling off, so I do have an in the money stop already in place. I don't need a break even stop anymore. So even though this does reverse on Tuesday, then I will get stopped out in the money, and you know, I got no problems with that, no problems at all. Anytime I make money, I got no problems with it at all, and hopefully none of you have problems with that either. Okay, so that is what I'm looking at for now. Okay, so that's my upside analysis. So if Uncle Ben comes out and starts making a speech saying that I will absolutely print as much money as, you know, we have trees to make paper, then I think the markets could potentially go higher, and we could see a 175.91. Or if not, and we do see a sell-off because institutions will start dumping their shares to retail traders, then I do see the 158.62, 158.34 levels in view. Now, depending on how long it takes, we do have this bottom trend line here, so it is contradicting. Because of this bottom trend line here, I should imagine that I would get support. What do I mean by that? Let me just activate this drawing here and just extend this bottom trend line. You will notice that, whoops, you will notice that price, in order for price to get to 158.62, 158.34, it would need to break down from this bottom trend line. And this bottom trend line, say we continue sideways all the way to maybe over here. Just an example. Let me move this. Say we start trading sideways, just as an example. I don't know if this is going to happen or not. Again, when I do these kind of things, it's a guess. Okay, I'm not telling you this is what's going to happen. All I can tell you is what I see in the charts. Okay, I'm not psychic or anything like that. I'm not going to play that game with you guys. All right, so if we come down, say it takes this long, and then we start coming down here, we're gonna see some support at this bottom trend line here, so we may not even get to this 158.62 level. So as we start consolidating sideways, if we do decide to consolidate sideways, that remains to be seen. And I only say that because the 20 moving average is right here, so we could actually bounce real soon, or break down from the 20 moving average, whichever way the the market wants to go, it doesn't matter to me, simply because I know what the upside levels are going to be and what the downside levels are going to be. But in order to break down from this bottom trend line, we would have to break down from this bottom trend line to get to the 158.62 and the 158.34 level. And we also have these two support levels here that we have to break down from just to get to this level too. So what I'm trying to say is, if we do get some sort of strong support here, it's going to be a while. It's not, I mean, the markets, unless there's a lot of fear in the markets, a terrorist attack or something like that, we will not probably head straight down. Okay, we consolidate, head down, consolidate, head down. You know, we're gonna get that kind of action. That's the norm, unless there's something big that happens, which does happen from time to time, but I wouldn't put money on it, is what I'm trying to say. So let me just show you guys something else here. Just check the weekly chart. Alright, back to the weekly chart, and some of you may wonder how I got that upper trend line here, and this is how I got the upper trend line from this pivot, and these two pivots over here, and of course now it looks like that we could potentially be making another pivot. Now this is literally a wedge type pattern. We don't break up from a wedge pattern. That, I mean, okay, let me take that back. I have seen it where we would break up from a wedge pattern, but when I ever see that happen, that means we will take a mean dump shortly after. So there is a possibility, looking at the weekly, the 175.91 level is not too far away. Okay, that could be the fake out, breakout before heading down. Okay, just want you to keep that in mind. Although the 175.91 is far, it's not impossible for that to happen. Okay, oops. All right. Anyways, let me reload my drawings here. I want to show you guys something else. Alright, all I'm gonna do now is get the last pivot, which is this guy right here. Right? I mean, we have a pivot here, pivot here, pivot here, pivot here, but then we just went straight up. Since last year, all the way straight up. I mean, it's just a continuous run, which is why I've been always saying be careful while going long. I'm not saying going long is bad, just be careful, you know, put your stops in place. Alright, let me just zoom in, show you what I'm talking about. From this pivot here, I'll draw a straight line down to this pivot here, the bottom. So this is a pivot and this is a pivot, right? Because we start from here, we go up, this is a pivot, we come down, this is a pivot, and then we just no pivots at all, just went straight up. Okay, this would be like a huge pivot if we come down, right? So let me just draw a straight line from this pivot down to the bottom of this pivot here, just right about there. Okay, it's not rocket science what I'm doing now. I'm just going to grab this line and put it here, right at this 20, right at the weekly 20 moving average. See that? From the very top, if this is the pivot, I do repeat myself, we may continue higher with the way markets are going, but if this is truly the pivot, then we should see a correction down to here, or at least a pullback on the weekly. Alright, so just keep that in mind. There is a possibility, at least for the weekly, that we can get down to the 20 moving average. Alright, next thing on the weekly, 1, 2, 3, 4, a whole month of all green candles. I know I talked about this in last weekend's video. I am expecting a pullback, and this could potentially be that pullback, right? That makes sense to me. It's in the upper trend line here, resistance. We got 4 weeks, 1 whole month of straight green candles, and it's not kind of gradual like this, it's bam. So we could potentially get a pullback where this bottom trend line over here would make sense to me. So we got the 20 moving average from doing this analysis, and then now we have at on the weekly, the 158 level would not be out of question. Okay, it would make sense to me. Next, we have a spinning top type of candle. I'd much rather it be a doji or some sort of shooting star. I rarely see shooting stars on the market now. Rarely. It is rare. So if I ever do see a shooting star on volume, that's going to look really good to me. Anyways, this is just a spinning top. Okay. In resistance, after a huge move up, actually the move started from here all the way up here. Okay, if you want to count that. And zoom back in. Let's look at the volume. This volume was pretty high. Okay. Now don't be fooled. We've had high volume over here, and we have had high volume here with no reversals. Just keep that in mind. But also take a look at this, how steep this run has been. Okay, so I do think and I do feel that we have a good chance of pulling back. A good chance. To me, it doesn't matter. If the market goes higher, that's fine with me because I'll get stopped out in the money. If the market goes lower, great. I'll just move my my in the money, so I'm more in the money. You know, that kind of thing. So that's how I played this game. So this is the weekly, which is longer term. Okay. Let's take a look at the very short term, which is the hourly chart. Okay. We come down. We broke above this trend line, right? Boom, break above the trend line on pretty good substantial volume. Was fake out. We come down. This is what we already talked about. Okay, we break through this 165.80 level. We come back up right into it and come down. And I know this 165.80 level held or is a valid level, whichever way you want to put it, because we go right into the 165.80 level. Okay. We're 4 cents shy. This one was this candle made at 165.76. We come all the way down. We go right into the 165.80 level once again. We come back down, and then now it looks like we're going to retest that 165.80 level once again. Now here's the key feature to look at. We are below the 20 and the 50 moving average. We come down, and now it looks like we are just creating this type of consolidation pattern, which could potentially bring us all the way down into this 200 moving average, which will obviously be support in the short term. Now, if it continues to be support in the short term, then we may test the 165.80 level again and possibly head back to the 169.52 level. Okay, just keep that in mind. But if we start consolidating and whatever, we're going to have nice support down here at this gap fill. And then obviously we're going to have support all the way down here at the 158 and 158.34 level. Okay, so all of what I'm talking about on the downside is not surprising, meaning it wouldn't be surprising to see the market do this. Okay, I would, however, be surprised if we can get to the 175.91 level. But like I said in the previous to this video about 10 minutes ago, I've been saying that for a very long time, telling you guys I'd be surprised if we get to a certain level and then we get to it, you know, on the upside. So I will not say, I take it back then. Right now, this 175.91 level, I would not be surprised if we get there. So just keep that in mind, that is still a possibility. All right, so that's it for the SPY. Favco 2010 has asked me to do the XIV, so let's take a look at that. Alright, I'm going to switch to the daily chart. Okay, so this is the daily chart of the XIV. Looks like I did some analysis for you back in February 15th. These are calculations. I did more here in March, from March 1st. All of these from March 1st, and I did for you back in December. Wow. So what I'm going to do, Favco, is I'm going to delete these levels here, because it looks like that I could potentially get things confused. And you can tell by the way these how thick these lines are, how long ago I did it. Alright, so I'm gonna leave those two simply because these levels here are still in play. Now this is a daily chart. Alright, so you're looking for resistance at the 24 level, And yeah, I think that's a really good resistance point in my opinion. It looks like we've come down. I would think of this as your your line in the sand, if you will. Let me just move this up there. Okay. So the way I would look at it is, the XIV is just currently trading in the middle of this. If you think of this as one big line, okay, you're just trading right in between it. So because this is, see, 64, the average, the ATR is about 64. All right, so there is a possibility. I mean, you're just moving sideways right now, okay? So we've come down and now you've tried to recover, right? Yeah, this is a tough one to analyze, but I'll do the best I can. Right now you're just trading in between. What I want to see is, you're going to see obviously some resistance at the 24 even number, which is definitely a good number. Any close above there, above here, will give me a bullish signal. Any close below here would be a bearish signal. Now, in my opinion, I'm just gonna guess. I don't know if you're looking to go long or looking to go short, but right now this is definitely in an uptrend. Now, if I zoom out, I bet you it's been in an uptrend for a long time. So let me just verify that. Let's go back 20 years here. Yeah, look at that. It's just been a huge run up, right? All right, so you're definitely going with the, with the trend. You're going swimming with the current, which is the smart thing to do. There's no doubt about that. So if you're going short, the 24 level does look good if you haven't already done that. So it looks like it hit the 24 level maybe about last week sometime. The high of this was 4 cents shy of the 24. But just keep in mind that this could potentially be consolidation. Let me show you what I mean. You have this up move, and now you're just going sideways, right? Let me just move this up a little bit higher. Okay. Now, I would normally not trade a chart like this simply because there's no clean pivots. There's a lot of volatility and stuff like that. I like to play stocks that have, normal patterns and stuff, but I'm sure that you're doing very well with the XIV. My style of trading just wouldn't match the XIV very much. But being that this could be potential consolidation, because we've already tested the 24 level multiple times, or this 2379 level at least, there's a possibility that eventually we may break through, and your next resistance point, which would be a very good resistance point, will be at a 2539. This would be considered, in my opinion, a double top. You should see at least a pullback back into the 2379 if this is what happens, because the 2379 would serve as pretty good support, and then eventually break through the 2539 level and head higher. That would not be surprising to me if I saw that happen. Okay. Now, the downside, let's just say the 24 level does hold. Don't mind this bottom trend line here. I think I just drew that just to see where the trend was going. But I wonder, I mean, if you grab this and you grab this and you just draw a line straight up, you could potentially see some support around this area here. However, going to the long side, I would, if this thing comes down, wait. The 200 moving average is creeping up. If the 200 moving average creeps up at the very moment, so let me take a step back. If price comes down into the 200 moving average, at the very moment it hits this double bottom, so you got the 200 moving average and this double bottom, it meets at the same time, that'll be double resistance in my opinion, and then I would take a long trade from there. But right now we're just going sideways, so it would be hard for me to determine whether to go long or short. I don't like to chase, so if it's already coming down, I don't want to short. If it's already going up, I don't want to go long. That's To me, that'd be chasing and it'd be a little bit too late. But again, I'm sure you're doing very well on the XIV. You've always asked me to do analysis on the XIV, so I'm just going to assume that everybody has their key stocks. Everybody likes. I know a guy who trades VMware all the time, and he does very well at it. I'm not so good at trading VMware, not as good as he is at least. But a lot of times when you understand the stock, when you know the stock, some guys I know only play 10 stocks out of the 500, out of the thousands that are out there. Only 10 companies will they play because they understand and they know how that stock moves and how players and institutions and how you can just develop this feel for the personality of how the stock will trade. And I'm just going to assume that you have that feel for the XIV. So that's my analysis for the upside and my analysis for the downside. Let me get you some mathematical calculations here so you'll have that in your arsenal as well. All right, I am back. It took me some time to get these calculations for you, but what the formula spit out was these numbers: 2149, then 2053, and then 1981. Okay, so those will be your support levels. 2149, you may get some support. We also have this gap window here. The 2053, you have this pivot point here. What I'm doing right now is trying to validate these calculations. What I mean by that is I don't just depend 100% on the calculations. I need some sort of secondary standard type of technical analysis just to give me that good feeling that these levels should hold. Actually, I have about maybe 8 possible support levels, but I only picked the ones that have supporting evidence that it should hold. And then we have the 1981, which is of course this double bottom here, should hold. So basically the 200 moving average goes into the 1981. Price also gets into 1981 at the same time. I would myself probably initiate a long trade if it ever got to that point. Okay, but again, this is more for the downside. The upside is still the 24 level as well as the 25. So if you short it at the 24, so okay, this is the upside, meaning any of these levels you could actually potentially go long. Any close below any of these levels is your stop. Okay, simple as that. And then you wait for the next level and then you go long. Simply put, just the opposite. The 24 level, the one that you're talking about, you could initiate a short, and any close above this, not the 23 but the 24 even number, or any close above the high, whichever the highest one was. With this one was 23.99. This high was also 23.99. So you already had the double top in play here. Any close above here, I would stop out and wait for the 25.39 level, or you could actually wait for the high of this candle, which is 29.69. Any close above this candle here would be your stop if you were to short to the upside. So that's how I would play the XIV. Very sorry guys, it's 28 minutes. I don't want to go over half an hour like I've always done before. I've already made my previous videos a little bit too short, and now it might be too long, so I'm just going to keep it within the 20-minute time span for the SPY, and anything else, any other type of analysis after that, under half an hour. So thank you very much for watching these videos. Again, I really appreciate you guys hitting that like button. I don't know why. Actually, you guys don't need to anymore, but I think just the video views is enough for me. So and thank you very much for the kind words that you send my way in the private email as well as in the comments. I do appreciate that. That is actually what helps me keeps me going. In any case, thank you very much once again. Good luck to your trading. God bless to you all for next week. Next week is a short week, so just remember that. And I bet that Tuesday, I'm just gonna throw this out there, Tuesday might be a little bit lower volume, so we may see some upside. Okay, so just keep that in mind. Tuesday we may see a float higher. Okay, so just keep that in mind. Unless there's really bad news that comes out, volume should be on the lower side. the remaining of the week, which would be Wednesday, Thursday, Friday. Only 3 days in the trading week. Friday is going to be obviously a lower trading volume day, so we're only going to have Wednesday and Thursday to actually really see where the market could be heading, possibly the week after that. Okay, so thank you very much again, and I hope to see you in the next video.